Profitable companies, great revenues, fancy offices, and still defaulting on loans. Welcome to the world of bhai, interest to dena padega. Today we are talking about interest coverage ratio. It's a content-based video from our value investing sessions on stock markets. It's that one number that tells you whether a company is actually earning enough to pay its loan interest, or if it's just pretending to be rich while the bank is sharpening its recovery tools. Don't worry, no jargons overloaded here. We'll break it down with real examples, real numbers, and explain what this ratio actually says about the company's ability to survive in the real world, where interest doesn't wait and lenders don't forgive. So grab your coffee, open your Excel, and let's decode this underrated but powerful, perhaps the most powerful ratio, the financial version of bhai to interest de payega ya nahi. The interest coverage ratio in a practical manner, the way it should be understood and comprehended. Stay tuned till the end so that you can understand this in a more lucid manner. Friends, welcome back. Let's take a situation. You're talking of interest coverage ratio. Okay. Now, nothing to do with interest coverage ratio, but let's take a situation. What I'm saying is, suppose I'm from an economically humble background and my daughter gets into IIM Ahmedabad, one of the most premier B school of India. Okay. What's the cost of IIM Ahmedabad? It's 30 lakhs for a 2-year program from IIM Ahmedabad, one of the finest colleges of India. Okay, and me and my daughter, we were very happy that she's got into one of the finest colleges of India. But because I'm from an economically humble background, I did not have fees to pay for her education. Okay. Now we approach HDFC Bank. HDFC Bank says, great, your daughter has got into one of the best colleges of India. We won't let her dream die down for lack of money. What we'll do is we'll fund her education. Okay, and both me and my daughter, we are very happy that now she can fulfill her dreams of getting an MBA from one of the best colleges of India. Right now, it's a 2-year of MBA program. Okay, the fees of IIM Ahmedabad is 30 lakhs. Okay, so let me write that for you. It's 30 lakhs. Now, what will be the agreement between my daughter and HDFC Bank? That you take the loan today, right? And you repay it when? You repay it once you are done with your MBA or once you get a job. Think through it. Pause it. Think through it. So you're going to, the agreement between my daughter and HDFC Bank would be that you do your MBA, take 2 years of loan, but you repay it once you are done with the MBA, irrespective of whether you get a job or not yet. That's not HDFC Bank's headache, na yaar. There's a high possibility and probability that she'll get a good package, right? But it will not be dependent upon she getting a job or not. Because अगर मेरी daughter शादी हुई, उसने बोला कि 2 years के बाद मुझे entrepreneurship करनी, ये तो कोई बात नहीं बनी ना यार. So the agreement will be that you take a 2-year of loan, you repay it once you are done with the MBA, of course with some moratorium period and something like that, but irrespective and oblivious of whether you get a job or not, right? That is in a way the risk the HDFC Bank is taking on her, right? So the principal repayment starts when? After 2 years, once she's done with her MBA, and it's a 2-year of MBA program. Suppose by rate of interest, say it is 10%. It's a 2-year of MBA program. Suppose I'm sitting in May of 2025. Her MBA starts from 1st of June 2025. So it's 1 year, it's 2 years, right? The loan repayment starts once she is done with her MBA. The interest amount starts when? The interest amount starts from today itself, once she has taken a loan. So if this is, so for the first year, suppose it's assuming a 10% rate of interest, suppose it is 3 lakhs. 3 lakhs is the cost, interest cost. Right? And for the second year also, it's 3 lakhs, the interest cost. right? And I have no means to pay the interest cost also. So HDFC Bank says, no problems. What you do is, you take 30 lakhs of loan. Instead of taking 30 lakhs of loan, you also take this loan and this loan, right? So that the interest cost during the same period when she's not working and not earning, that can be paid to HDFC Bank. Okay. So for my daughter, how much of loan she has taken? She has taken a loan of 30 lakhs plus 3 lakhs plus 3 lakhs. So for my daughter, the cost is not 30 lakhs, but 36 lakhs. It is 36 lakhs for my daughter, wherein 30 lakhs has gone to IIM Ahmedabad, and the balance 6 lakhs, it has been capitalized. Hear my English. It has been capitalized and added as part of cost of her MBA. So for MBA cost for my daughter is not 30 lakhs, it is 36 lakhs, in which 30 lakhs has been gone to IIM Ahmedabad, and the balance 6 lakhs has been capitalized and added as part of cost of her MBA, which she's going to start repaying once she is done with her MBA, right? But during these 2 periods, when she is not earning, what is happening is that kharcha of interest cost has been capitalized and added as part of cost of her MBA. Henceforth, the cost of MBA for my daughter is 36 lakhs and not 30 lakhs. That is exactly the same analogy which is happening in case of the companies that we have discussed in the previous video. Exactly the same analogy. Now you say, let's take off Tata Steel. In the case of Tata Steel, when it comes to Tata Steel, you see this here. If I talk of 2025 May, the total debt of the company was 94,000 crores. Okay. Assuming a cost of debt of say 10%, just for the sake of simplicity. But it might have been more than that. It cannot be 10%, it will be more than it. But for the sake of simplicity, assuming my cost of debt is 10%, it comes out to be 9,400. 9,400. But what you see is the actual interest cost of 8,400 over here. 8,400 of interest cost. Beg your pardon. मेरा पार्ट थोड़ा सा एडिट करेंगे अंकित. So you have your debt cost of 94,000, assuming a rate of interest of 10%, your interest cost is 7,300. But it does not mean the company has actually paid 7,300. Company is supposed to pay 9,400. Just like in case of my daughter, the interest cost starts immediately today, right? Even though the principal repayment starts after 2 years. So what has happened is, in this case, the balance, say 2,100 odd rupees. Hear my English. The balance 2,100 rupees has been capitalized and added as part of my fixed assets somewhere over here. It's a part of my fixed assets. So this would have been added somewhere over here in my fixed assets. Somewhere over here. This balance 2,100 rupees. Or in my capital work in progress. Understand. ध्यान से logically समझना. There is profit and loss account. There is the balance sheet. Okay. Profit and loss account is that income or expenditure which is incurred once the business starts operations. उसके पहले का जो भी खर्चा है, that will be capitalized and added as part of your fixed assets. Okay, same thing which is happening in case of Steel Authority of India Limited also. You see this here. Your interest, your total debt is 3,600. But so, assuming your rate of interest to be 10%, assuming your rate of interest to be 10%, you have paid 3,600 as interest cost. 3,600 is interest cost. But what is coming in the profit and loss account? So this is taken from the profit and loss account. It's coming out to be 2,400. But actual interest cost has been 3,600, in which the balance 2,400, the balance 1,200, which is 3,600, the actual interest paid minus 2,400, which is shown in the profit and loss account. This 1,200 rupees has been somewhere, somehow capitalized and added as part of my fixed assets over here. It's been added somewhere over here. It's been added somewhere over here. Just like in case of my daughter, 6 lakhs rupees of interest cost, which was before the start of operations, for the period of 2 years of capex, when she was doing her MBA, when she was not earning, that was capitalized and added as part of cost of her MBA. Similarly, this cost has been added, capitalized and added as part of the fixed assets over here. And if I go again back to NHPC, over here, I said interest coverage ratio is EBIT upon interest. Let's apply the same interest coverage ratio over here. The interest coverage ratio is, it's EBIT upon interest, which is what is taught to us in terms of the textbook definitions. So if this is what it is, this is my EBIT. It comes out to be 5,200 divided by the interest cost of 877. So 5,200 by 877. It gives me a comfortable interest coverage ratio of say 6.5x or something like that. Right? But the actual interest cost is not 877. Assuming a rate of interest of 10% or 11% or 12%, let's be conservative, as conservative as possible. Let's assume that the interest rate was 12%, because the financials are just like that. They're not that great. So assuming a rate of interest of 12%. Okay. So the actual interest cost would have, interest coverage ratio would have been what? This would have been 5,200 divided by not this 877, but an assumed rate of interest of 12% or 13%, as the case may be. Let you be as conservative as possible. So assuming, and which is the actual interest which the company has paid, the actual interest. So if it is assuming to be 12%, so this comes out to be 23,000 into 12%, comes out to be something around 3,000. This gives me an interest coverage, the actual interest coverage ratio of around 1.7x as compared to the textbook definition of 6.5x. And there is no which ways we can get to know that how much of interest has been capitalized and how much of interest has been OPEXed. So for our purpose of our analysis about the solvency of any company, let's take it that let's go with an assumed rate of interest of 10, 11, 12% as is comfortable and as is conservative, instead of the textbook definition of an interest coverage ratio of 6.5 to 1.7 as the case may be. I hope this is clear. Just to give you an example, just to make it more clear for you, let's understand this well. And I'll come back to this Byju's example also. Now let's take it that suppose there's a company. I have purchased a machinery, right? I purchased a machinery of 400 rupees, right? The entire machinery is purchased on debt, assuming my rate of interest to be 10%. Okay. So the interest amount starts on the very first day. Okay. Now this machinery will take 2 years to function, to start functioning. So the first year and the second year, right? This is pre-start, and this is the third year, the post-start. This is the third year. Okay. So if it is 100 rupees of debt, 100 rupees of loan which I have taken, the first year I need to pay 10% interest. So
I said any kharcha which is before the start of operations that will be capitalized and added as part of the fixed assets. Henceforth, in the first year, this was my machinery of 100 rupees. 10 rupees has been added to this. My machinery cost becomes 110. Second year, before start of operations, 10 rupees of interest cost has been added to it. The machinery cost becomes 120. Right? Third year, once the business operations start, that time this 10% interest cost will be expensed to my profit and loss account and not capitalized and added to my fixed assets. I repeat, in the third year, once the business operations have started, at that time, that kharcha which is incurred once the business operations start, that time, this 10 rupees will be expensed in my profit and loss account and not capitalized and added in my fixed assets. And now I'm going to charge depreciation on 120 rupees and not 100 rupees because the asset value has gone up from 100 rupees to 120 rupees. Same like I showed you the examples of Tata's or or NHPC or Tata Steel or Steel Authority of India. Let's see it again. Let's talk of Tata Steel. Your total debt was 9400. You actually paid say 9400 rupees, in which the profit and loss account is 7300. So additional 2100 rupees of debt which you actually paid, that debt was added in your fixed asset somewhere over here. Your asset value has increased by 2100 rupees over here, which is the capitalized interest cost. Just like in case of my daughter, the MBA cost increased from 30 lakhs to 36 lakhs. Okay, I'll give you an example of this company called Byju's. Let's talk of Byju's. I'm talking of Byju's when it was at its high. Okay. And this is Karthik Chidambaram. So he was a member of parliament. He's son of Mr. P. Chidambaram, former finance minister of India. This is dated 14th October 2022. Okay. Now, basis the letter, he questioned Byju's books of accounts in the parliament at that point of time. And basis the learnings we have had so far, let you try to understand this. Okay. So it says Byju's, an Indian technology company, has released its fiscal year after 18 months delay, nearing missing 4 deadlines. So analyzing how Byju's earns its money and where it spends is puzzling. Nearly 81% of its operating revenues for this constitutes sale of heritage tech products, and this includes sale of tablets, SD cards, blah 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 blah. Let's talk about the second point, important one from the perspective of what we have learned. On the expenses front, and this is by the way the time when Byju's was at its peak. On the expenses front, 60% of the cost related to employees have been recognized as a capital kharcha rather than an operational cost. Digest this line again. 60% of the cost related to the employees have been recognized as a capital kharcha rather than an operational cost. If these costs were to be counted as a direct expense instead of a capital expense, Byju's total loss would have gone over 5,000 crores. Such irregular accounting practices fail to give a clear picture of Byju's income, expenses, and losses. Byju's reported losses of 2,000 crores this year. I mean, the year that I'm talking about in 2022, in which 3,000 crores of employees' cost, which was supposed to be a part of the profit and loss account, they did not show it as an operational cost, but they capitalized it and added it as part of the fixed assets so that the losses are shown as less. Yeah, so the fixed asset cost has gone up, which is wrong. Accounting wise, it is wrong. And you've shown that you're just a 2,000 crore losses as compared to 5,000 crores if that operational cost of employees would have not been capitalized and added over there. Okay, so let's not get into that jhamila of what the company has done. When it comes to our understanding of the capitalized of the interest coverage ratio, Let's go with an assumed rate of interest of any company. For example, if it was the case of NHPC over here, if your total debt is 32,000, let you assume it to be 12% or 13% or 14%, then find out your interest coverage ratio. That will give you a much better perspective and a clarity about the financials of any company. So let's understand interest coverage ratio and let's apply interest coverage ratio in the most practical manner. This is something that we have learned in this video. I hope this is clear. Okay.